Hey, what is up everyone, and welcome back to another video. Today we're taking a look at Dogecoin, which is currently up just 1% today. Now the entire market is seeing sort of just a consolidation today, as Trump has announced 245% tariffs now on China, which is causing the S&P to be down 1.7%, which isn't actually that tragic in comparison to what happened last week and the weeks prior, where we were seeing 5 to 10% dips nearly every day. Now before we jump into all of that and exactly where Dogecoin and other coins are going to be going over the next few days, make sure you guys go check out the Discord down below. You can see on the screen right now just how many trades our members have been winning from simply joining and starting to copy and paste the trades that we're sending out to them every single day. It's been absolutely insane. We have over an 85% win rate, so make sure you join up. First link in the description, start copying our trades. Now back to Dogecoin. So yeah, I mean, to quickly recap what has sort of gone down on Dogecoin, we saw a huge crash from the highs of like 48 cents, nearly 50 cents, all the way down to this support area right here, which is the 0.786 on the Fibonacci, roughly at 15 cents, somewhere around here. After that, we started to see a little move up. This usually happens after any sort of major, crash. We will get a slight move up simply from the exhaustion of sellers and a few buyers stepping in because they see value in the coin when it's so low. Then that happens and we rallied to 20 cents, which was like a 30-40% increase, so quite substantial, and that then allowed more selling pressure to be applied as there's more liquidity now and we're at a higher price, so more people can sell and retain bigger profits. Then we sold off more, hit a low of 13.3 cents. This was obviously also deeply worsened by the extra tariffs that Trump put on, and that's essentially why we carried on crashing. Now we're in a similar sort of state as we were at the lows, maybe slightly worse, as now tariffs have increased to China from the US, and there's probably going to be some retaliation there from China as well. And I think the market, at least crypto, hasn't yet fully priced that in. The S&P is slowly starting to, and probably when China announces their retaliation, I think we're going to get an even deeper crash again. So yeah, the market isn't in the best state right now, and I think that's why we're not seeing any sort of second leg yet in the bull run. But that's also due to a numerous amount of reasons as to why. So obviously the tariffs are causing a lot of uncertainty in the market, and when there's uncertainty, these larger investors don't want to buy. We've looked over ETF inflow data on like Ethereum and Bitcoin, and it's become evident that whenever we see these sort of moves going up, ETF inflow is going up as well, which essentially means that these investors prefer to buy when there's momentum, when we're starting to go up, and they like that, they buy. When the momentum shifts and we start going down, that's when they start to sell. It's not like they try and buy low and sell high. They instead just try and trade with the momentum. So it's very, very different to how most retail traders move. In many cases it's also the same, because a lot of retail traders get FOMO, and when they see a 50% move up, they'll start buying and buying and buying, and then we obviously dump. Whereas these ETF investors, they slowly start accumulating. Say we see a 5-10% move up, they'll slowly accumulate that. Say we dip again, they'll either sell or just hold. So we start going up again, that's when they start buying. But I think it's usually better to do the complete opposite, where it's you're buying the dip, and there's numerous memes about buying the dip and how it keeps on dipping and keeps on dipping. But if you do it efficiently enough, and the way we do it is, say for example, Doge isn't the best example because of how spread out the sort of support and resistances in Fibonacci is, but on HBAR for example, so our initial entry was at 22 cents, because again that was like a 50% dip from the highs. Second entry was at 18 cents, sorry, right around here, which is at these lows, and we have a third entry at 11 to 12 cents. So we have three main entries, and if all of them come down and get hit, great, we'll have a really, really good average entry, and when it goes back up to those highs, we're going to be up over 2x. How most sort of retail traders like to DCA is, say we're at the highs here at 48 cents, they're going to DCA at 39 cents, they're going to DCA again at 33 cents, they're going to DCA again at 28 cents. The DCA is so high up that it doesn't actually make sense to DCA. You're not really DCAing, you're trying to buy a very little dip. Instead, what's best to do is find value coins, for example Bitcoin, Ethereum, Doge, XRP, Solana, HBAR, coins that have been around for a while and have proven themselves in multiple bull and bear markets, and you want to be accumulating them after they've had a 50% dip, a 60% dip. That's when you want to start DCAing. You don't want to start before before. You want to start right after, and then you want to find the support levels. Like on Dogecoin, for example, we have 15 cents. Next one might be like 10 cents. The one below might be, 5 cents, 6 cents, if it goes down that low. And another key thing to remember with DCAing is that it might not happen. Not all your DCA levels might get hit on all your trades. So it's important to also have, similar to how I have my price targets, have one pessimistic entry. So, if everything goes bad, it will probably go down to 5 cents on Dogecoin. One pessimistic, one neutral. The market continues as it's going, we're probably going to dip to 10 cents, have that sort of entry. And a super optimistic, if the market fully turns around right now and we see a rally because of great news that comes out in a few hours, boom, we have a 15-cent entry. That way you have the best of all three worlds. If the best comes to best, we pump, we're in. If the worst comes to worst, it's fine. We've DCA'd here, we've DCA'd lower, we've DCA'd when the worst comes to worst. And after that, there's not really much you can do. A lot of the time you leave, the position in the market's hands, and that's okay as well. If you're looking for an exchange to actually DCA on, then check out all the exchanges we're working with down below. When you use my links to sign up, you will get some lower fees and some nice sign up bonuses as well, so make sure you do that. Now, a few other coins to keep an eye on this week. Dog with hat. Again, this is the meme coin that I love shorting. One of the best meme coins to short. Whenever it sees any sort of move up from news regarding other coins and so on, shorts will always print for dog with hat, simply because it's a really, really bad meme coin in my opinion. The community behind it is non-existent anymore. You can see from us hitting $4.70 and coming down to 36 cents right now. So yeah, really good shorts to be found here. I was looking for some shorts from this level here at 50 cents, maybe even 59 cents, but we didn't hit that yet. Might still find some good shorts there. SHIB is just consolidating, not really much movement there. Pepe, same thing, we're just at this support level. Would I be buying right now? Not really. I'm also looking for Doge. Other coins that aren't meme coins, again, HBAR, we're on the weekly chart right now, and 11 to 12 cents, it seems like it could come very, very soon. Fetch, again, just sort of consolidating on support right now. It really, really needs to hold on, otherwise we might see 12 cent, 15 cent fetch, which is insane. API 3 dumping down from its relatively large pump up, down 7% today. XRP actually holding on quite well to the gains that it gave. I think it's quite well priced in right now. Once the market comes back to its fruition, we'll probably see $4-6 on XRP. Sui, another great coin I love, just sat on the support right now from the previous resistance level. Again, we're going to be targeting at least the previous highs here. Polkadot and Render, sort of similar, just sat on the support, chilling. Really not much more going on that. Solana is in an interesting position just at this resistance level right now, and it will be interesting to see if it's able to break through or whether we're just going to come back down to like $100. ETH also really, really undervalued right now, sat at this support at like 1.5, 1.6k. If it breaks this, we're probably going to go down to like 1.1, 1.2. And Bitcoin, looking whether it can break through 90 or whether it's just going to consolidate and probably come back down to 74,000. Now, if you did enjoy the video, please do make sure to like and subscribe. And if you want to be getting my trades every single day, then check out the Discord down below. If you need a place to buy, sell, or trade cryptocurrency, again, check out the exchanges we're working with down below. Thank you all for watching. I'll see you all tomorrow. Goodbye, guys.